Hello and welcome to this week's episode of Coinscrum Markets. I'm Nisa and Ray. Coming up, I'll be joining venture capitalist Tim Draper for his view of the crypto markets and Ray Sharif-Askary, Director of Business Development from Grayscale. Teana is joined by Patrick Heusser, Senior Trader at Crypto Broker AG, to look at the markets in this week's Crypto RFQ. Philip Gradwell from Chainalysis reveals more insights. First, a look at this week's blockchain industry news. The move towards the tokenization of traditional assets became more apparent this week. French banking giant Société Générale appears to be betting big on blockchain and tokenization. Last week, the bank carried out an experiment with the Banque de France, the country's central bank, to issue bonds as tokens and then settle them in digital euros. The bank is also building asset tokenization solutions to help improve liquidity for investors. In another move, exchange giant Nasdaq, along with a 28-strong group including Microsoft, IBM, Accenture, and Chainlink, announced the launch of the Interwork Alliance, a nonprofit organization aimed at bringing global standards for the token-based ecosystem. The Digital Dollar Project, the high-profile partnership between Christian Carlo's Digital Dollar Foundation and consulting firm Accenture, released its first white paper. The paper warns that if the US government doesn't start thinking seriously about how to design the digital dollar, it could end up losing its ability to impose the nation's values on the financial system. People's Bank of China Governor Yi Gang has said that there is no timetable for the official launch of the digital yuan. Yi said that tests are still a routine work in research and development process, and it does not mean that the digital RMB will be officially issued. However, at the same time, China's Communist Party's new blockchain book casts Libra as a threat to its currency system. US investment bank JP Morgan was making headlines again this week when it reported that it had agreed to pay $2.5 million to settle a crypto class action lawsuit. The suit, originally filed in 2018, alleges that the bank overcharged customers making cryptocurrency purchases using Chase credit cards, classifying them as cash advances. Finally, crypto analysts noted this week that the total number of Bitcoin currently being held on deposit at major exchanges has fallen to its lowest level, 1.36 million, since Q2 last year, a level that saw the price of Bitcoin rally from under 4,000 to 14,000 then. Our own Philip Gradwell has, of course, been covering such metrics extensively in recent weeks, so stay tuned to get his latest thoughts later in the show. That's the news for this week. Next up, Teana talks to Patrick Heusser, Senior Trader at Crypto Broker AG, to look at the markets in this week's Crypto RFQ.
Thanks, Nisa. I'm Teana Baker-Taylor, and I'm delighted today to be joined by Patrick Heusser, Senior Trader at Crypto Finance AG. Hey, Patrick.
Hello, Teana. It's a pleasure to be here.
It's great to have you. So, Patrick, tell us what's happening in the markets this week.
We have seen quite some trading activities across the globe, especially Asian accounts are quite bullish on the major, I would say, top 5 coins. There is some spot of physical buying going on, but there is also some derivatives buying across various currencies going on. So the mood is quite positive at the moment.
Yeah, the market does seem like it's been pretty buoyant over the last week. And, yesterday, to not a huge amount of fanfare given the other news that's going on at the moment, Bitcoin finally crested $10,000. It's back down a little bit this morning, but what do you think that caused the spike?
We were following that market structure quite closely, and it was very interesting to see that the push came out of derivatives. So we have seen open interest spiking up, and the funding on perpetual swaps went to crazy levels, which is usually a sign that it's kind of a blow-off top. And that's what exactly happened then in the end. It reached almost 10,500, and then some sell orders came in, and the buyers were just weak because they had used all their firepower to push it above the 10K level. And then it's just a normal day in crypto. We go $1,000 lower and then start to consolidate over the next 12 hours. And now I think the market has repositioned themselves a little bit, regrouped, and the next move will be around the corner, I'm pretty sure.
And how did that affect some of the other coins sitting at the top of the league table? You mentioned the top 5. What did this, how did this impact them?
The usual behavior in this market, when there is a strong move of the king, we call it BTC, then you see that all the other coins are moving in lockstep. The correlation is very high, and that hasn't really changed over the past few years, actually.
Okay. And were there any other surprises over the last week that you found interesting?
Yeah, well, it surprises me that Ethereum is holding so well. If you look at the cross Ethereum BTC, then it's just in a steady upward movement. And there are a lot of topics out there. Obviously, their Ethereum 2.0 launch, which is somewhere in the future, but it's a topic that is getting discussed quite frequently.
Yeah.
And some smart money guys are looking at those coins, or BTC and Ether, and they're now quite happy starting to switch from BTC into Ether, and that seems to give Ether that bearish tone over the past few weeks, even months.
Okay, so looking ahead this week, we've seen in the past that sometimes traditional markets, even though the crypto market is largely uncorrelated, news within traditional markets can impact the crypto market. The ECB is meeting this week on Thursday to discuss possibly increasing their pandemic fund. So another round of possible quantitative easing coming out of the ECB. What impact do you think that might have on the market next week?
It is a difficult question to answer, and I need to answer it in several steps. Short-term wise, Bitcoin or crypto will move like risk-on assets. So if the ECB decision is triggering a rally in equities, which is then risk-on, BTC will probably profit from that as well. And vice versa, if the ECB is disappointing, then markets sell off in equities, then BTC might as well come lower. QE in the medium to long term really needs to have an effect on BTC. I'm convinced it will have. It will have a positive impact on Bitcoin, because it will just strengthen the core value, the core store of value Bitcoin has. But that needs time. You will not see that at an ECB decision, or even when the Fed was pulling another QE round out of their hats. BTC wasn't at that time very impressed. It just went risk on with all the other assets after the decision. But in the medium to long term run, I think we will see a decorrelation of store of value assets really gaining compared to more like the fiat side of things. Okay.
Patrick, thanks so much for joining us this week.
You're welcome. Thanks for having me.
Take care. Back to you, Nisa.
Thanks, Teana. Grayscale Investments, a crypto investment fund manager and subsidiary of Digital Currency Group, recently announced that the value of its assets under management had reached 3.8 billion, up from 2.1 billion as of May 2019. The average weekly investment into the trust has increased by over 800% when compared to Q1 2019's 3.2 million. I'm joined by Ray Sharif-Askary, Director of Business Development, to discuss this. Welcome, Ray, and congratulations.
Thank you, Nisa. Thanks for having me on.
So with 10 times the annual inflows into the fund, how does that compare with, say, a year ago or 3 years ago?
It's a great question. This has been a record year, record quarter for us, and candidly, we've never seen demand like this before for our products.
And has there been any impact from the pandemic on demand?
There has. From a broader perspective, COVID-19 and the policy implications especially have really set the stage for Bitcoin to become the store, be seen as a store of value asset that we had hoped that it eventually would be. We have institutional investors are taking active long positions in digital assets through our products. And it's because they're looking for an asset that is scarce and that can be used as an inflation hedge in a world where we're faced with unprecedented monetary stimulus.
And so is that specifically with the Grayscale Bitcoin Trust? Or are you seeing investments in altcoins as well?
Well, I think to take a step back, we've raised in Q1, we raised over $500 million products across all of $500 million, across all our products. About 390 million of that was into our Bitcoin trust. We also saw about 110 million in the Ethereum product. And I think you'd be remiss to not look at the broader narrative there, which is that we continue to see diversification. Right now, about 38% of our investors are allocated to multiple Grayscale products. About a year ago, that number was a little under 30%. So it's certainly encouraging to see investors allocate and diversify within the digital currency asset class, just like they would any other traditional investment, traditional asset class.
Absolutely. In the early days, it was mostly people taking advantage of exposure in their 401k plans within pension allowances. Has that changed over the years, or is that still the primary reason investors are choosing to gain exposure this way?
There's always been a lot of reasons that investors use our products. Getting exposure through tax-advantaged accounts has always been one of them and will continue to be one of them. At the end of the day, our investors are looking for a way to get exposure to digital assets in a form that doesn't require them to buy, to store, to custody these assets themselves. And they're really not set up, digital assets are bare assets, they're not set up to fit within the operational and legal frameworks of most investors.
And what kind of investors? Is it mostly retail or institutional?
That's a great question. Since the inception of our firm, about 90% of the inflows have been from institutional investors. That's a trend that's continued to grow, This past quarter, about 88% of the flows came from institutions. And breaking that down further, we looked at the types of institutions. So within hedge funds, for instance, that's a big segment. We looked at the different kinds of funds that allocate to our products, and it's not just, it's actually a really small amount of cryptocurrency funds. For the most part, it's traditional hedge funds. About 44% came from multi-strat hedge funds. There was a lot from long-short equity funds. So it is, for the most part, traditional hedge funds.
So you're now at 3.8 billion in AUM, and the largest gold ETF has about 10 billion. When do you think you'll overtake them?
It's funny that you bring that up. Over the last 12 months, we actually raised over $1 billion into our 10 products. It would be great to see that demand remain constant and to even increase. I think it's impossible to say when we'll overtake the world's largest gold ETF, but I do know that the idea of Bitcoin as digital gold and as a store of value is only becoming more and more prevalent. And so as investors think about finding uncorrelated sources of alpha, your guess is as good as mine.
And do you think the Jonesing effect, as I call it, the Paul Tudor Jones eliminating the career risk from allocating to Bitcoin, had more of an effect than the halving per se?
I think it's hard to separate. I think at the end of the day, people are looking to this asset class. They're curious, they want to learn more, and it certainly helps when we have tenured, seasoned investors speaking out and raising awareness around the asset class.
So you recently published a study about the number of women interested in Bitcoin up from 13% last year and growing, which is great. How do we keep it growing?
I think the way we keep it growing is we continue to educate. We continue to try to get out there and raise awareness. Women have indicated they want more exposure to educational resources, and that's something certainly that we're trying to do at Grayscale, and we encourage the broader digital currency community to do that as well.
And you also recently had a report about central bank digital currencies, drawing distinctions between them and Bitcoin. Any comments on that report?
I think at the end of the day, what's happening in the backdrop is causing investors, also institutions like governments, to really think about digital currencies as a tool. And I think that's a really good thing because, again, it's another way that we're raising awareness and causing people to become more educated.
Great. Well, thank you so much for joining us today.
It's my pleasure. Thank you for having me on.
Tim Draper is a pioneer of business ventures in the USA and co-founder of Draper Fisher Jurvetson, which has a leading position in terms of venture investments in technological companies that are in the early stages of development. Currently, venture capitalist Tim Draper is actively investing into cryptocurrencies, and he's one of the primary investors in the Tezos project, which has attracted a record $232 million in Bitcoin and Ethereum. So welcome, Tim. Thanks for joining us. Well, let's talk about crypto. So the West Coast venture capitalists like you bet in early. And now we see Wall Street coming around. You have Paul Tudor Jones eliminating career risk by allocating to Bitcoin. And then you have Goldman Sachs's view that came out last week. What do you make of what's happening on Wall Street with crypto?
Well, I have a pretty good sense because we're investors in a lot of great crypto companies, Coinbase, Tezos, a lot of these currencies, and they have had a heyday during the lockdown. Mm-hmm. Things have gone very well. So here's what happened. All the early adopters were there and very impassioned and excited about what they were doing. And then the lockdown happened, and then people said, what is this crypto thing? Well, maybe I'll put together a Bitcoin wallet. Let's see what happens. And then they go, oh my gosh, I can keep all my money in something like this. I don't have to give it to that banker. And so they started to take their money out of banks and putting them into crypto. Well, naturally, that's going to freak out Goldman Sachs. They're going to be going, wait, what? Where's your money going? And because we like to control your money, because that's why we have the fancy suits like this one. And we have the big buildings and the fine cutlery and whatever. It's because we're using your money. We're taking your money and we're using it, and then we're, letting you have it back when you ask for it. Well, and we're the trusted third party. Well, now there's a trusted third party that is not nearly as greedy. and that is the Bitcoin blockchain. And all of a sudden, on the blockchain, all the transactions, everything's being kept, the perfect records are being kept of every single transaction. And people are kind of going, wait a second, wow, I can put my money up here and I can do much better. And this money is not subject to political whims. It's not subject to like the government printing $9 trillion. You realize how big $9 trillion is? Our whole U.S. economy is something like 20 trillion. So they basically took a half a year of our economy and just flooded the market with dollars. And they're saying that's not even enough. Well, of course, they shut down the place. They got to pay for it. And so now the dollar's worth significantly less. So if you were holding dollars before the 9 trillion, all of a sudden you've been diluted significantly by this 9 trillion. And that tends to be the beginning of inflation. Well, that same thing, think about, we always thought, well, the dollar, everything's fine because the dollar is fine. Well, and sure, if you're in Argentina with a peso, you know that it's going to devalue about 30% a year. Or if you're in Nigeria with a naira, you know it's going to devalue 50% a year. Or Venezuela with a bolivar. They all devalue and everybody knows it. And holding on to those currencies is like a hot potato. And they've all started to adopt Bitcoin as their above government currency. Well, now I think the U.S. is starting to realize, hey, our currency is also subject to political whims, and we are going to need an alternative that doesn't dilute, that doesn't force inflation, that is easy, transferable, open, global, which is better than the dollar. Dollar isn't accepted everywhere. And it's transparent. It keeps a perfect record. And so all these people are starting to use it, and they're going, hey, this is great. And they're pulling their money out of the banks. And the banks, what do the banks have to sell? They have the opportunity to put your money in the bank, risking it in the bank where they're being hacked all the time, for 1-2% maybe on your money. Or they say you can buy some of our stocks. The stocks are seriously overvalued. Everything in the public market is seriously overvalued, particularly since we shut down the economy and 20% of the workforce isn't even working. We're not going to have the money to support those companies. So you don't want to put it into the public stocks. You don't want to put it into bonds. They're not paying out much. So where do you put it? You put it into private companies, venture capital, or you put it into crypto. You put it into Bitcoin because you know that is stable. You could try gold, but that's sort of like investing in history. Mm-hmm. It's not investing in the future. Or you could just buy some Bitcoin, hold on to it. You're going to see that it's going to grow and be worth more, and then you can spend it down the road. So here's what's happened to the world. The world has, first of all, the internet opened us all up, and the borders fell, and we all started to do business with each other, and we were all better off. When we can do business with each other, liquidity improves, the ability to transfer goods and services improves, markets are bigger, everything's better. The world really did grow over the last 12, 15 years in a big way. We were so much better off. And then what happened was this new currency was global. So it threatened the tribes. Right. We all got along very well with tribalism for many, many years. And now we realize that globalism's better. Mm-hmm. And now the governments who have been running the tribes are saying, uh-oh, I am at risk of becoming extinct. And so I need to adapt. So some of the governments are going, yeah, let's be an open, transparent, free market government. Let's make Bitcoin a national currency. Let's encourage entrepreneurs to try new things here. Great. And then the other ones are the fearful ones, and they're saying, no, we have to make this illegal. And what they do is basically they're cutting off all of their people from great new technologies to transform the progress of their country. And the rest of the world, our world is saying, no, we want to be global. And the tribal governments are saying, no, you have to be tribal. And the rest of us are all realizing that, no, this is one big globe. We're better off with global markets. And, when you put up a trade war, you're hurting your own country, you're hurting the other country, and both are going to sacrifice. They're both going to hurt. So if you want your country to do really well, what you do is you open everything. You say, we are open for business. Come on in. We'll trade with you. We'll do whatever. And many of the countries of the world are starting to do just that. And that's very exciting. And then some of the countries are saying, no, we want to control our people. China, under Deng Xiaoping, China grew at an extraordinary rate. The quality of life went up like crazy. The economy boomed. The entrepreneurial environment was just infectious. It was so good. I wanted to move there. Everything was going there. It was great. Everything was great. And then they got this new leader who says, no, I'm not going to be president for just these 10 years. I'm going to be president forever. And I own everything. And no one can send money across the border, and no one can leave this country. And now we're going to set up a trade war with our biggest trading partner, the U.S. Well, that basically has forced China into, during this 5 or 10 year period, they have lost momentum on their entrepreneurial energy. They've lost momentum on technological development. People say, oh, no, China's doing all this technology. Well, yeah, the government of China is taking some technology. Think of the government of the U.S. taking technology. It'll be like 20 years before they implement anything. They're taking this technology and doing something with it. But the people are not behind this leader. They're just afraid, And so when fear persists, bad leaders can thrive, and he is. So we got a bad leader in China, and I think trade wars, putting up barriers, putting up walls, it hurts you. And I'll tell you, this is the best way I can describe it. Let's say you have a great house, and we're the only two people on the earth. You have a great house, and I have a great farm. If we don't trade, you die of starvation, and I die of exposure. We've got to do a deal. Well, you multiply that by 8 billion people and trillions of dollars of economic value. And we need those deals to happen. We need them to be very liquid. And as those deals happen and they become more liquid, we all live a better life.
With regard to the banks that you've been talking about, are you excited about DeFi and eliminating the banks?
Well, DeFi is going to challenge the banks. See, you never really eliminate. It takes a long time to eliminate another way of doing things. People move very slowly. Some customers have this great loyalty to their bank. They never really want to change. And some customers are saying, well, wait, this is way better. I want DeFi. I want Bitcoin. I want a blockchain. I want my accounting to be done for me. I don't want to have to go pay an accountant to do it. So I think DeFi is it's pretty interesting because it's not only doing all the things that you can do with your bank, but it's doing new things that no bank could ever do. Micropayments, airdrops, new ways of moving money around or to different countries, new ways of employing people, of working with people, new ways of helping the gig economy, which we need really badly now because we've got 41 million unemployed in the US and about 10 times that worldwide. Yeah, I think DeFi is a big opportunity, and people should be getting behind it. And you do sort of sidestep the bank. The bank has been taking 2.5% to 4% every time you swipe your credit card. You don't have to pay that anymore. So the world is changing, and it's going crypto, and it's going toward Bitcoin and the blockchain and smart contracts. And that is 5 years from now, you're going to go into a Starbucks and you're going to try to pay with dollars or with a credit card tied to a bank. And they're going to think of you as that little old person who's pulled out their little purse and they're taking a penny at a time and paying for their coffee and change. That's the way it's going to look. It's going to feel like you are in the distant past.
Tim, thanks so much for joining us today. Next, we go over to Philip for this week's on-chain reaction.
Thanks, Nisa, and welcome to On-Chain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, here to show you what's been happening on the blockchain. And for those of you who've been following for a few weeks, we've changed the format ever so slightly. Previously, we had looked at the last 7 days from Sunday. Now we're looking at the last 7 days from Tuesday. And I'm glad that we're doing that this week, because on Tuesday this week, the Bitcoin price, which has been rising recently, suddenly pumped up to $10,000 before swiftly falling back to $9,500. And if we look at the on-chain inflows, well, they'd actually continued the trend that we'd seen last week of being low relative to historical averages. That is until Tuesday, the 2nd of June, when all of a sudden they doubled, with 65,000 Bitcoin more than average going into exchanges. And that's interesting. Price goes above 10,000, people seem to rush to the exchanges to sell. Perhaps why that price pump wasn't able to be maintained. We've also looked in previous weeks at the increase of balances of Bitcoin on exchanges. And this week, we've got the clearest signal yet that those balances are increasing. Even at the lower bound of our estimates of Bitcoin going into exchanges, we're seeing increases day by day. So there's more and more Bitcoin being stored on exchanges. And what's interesting is that Bitcoin is being traded less frequently. So if we look at the trade intensity measure, that's the ratio of the number of Bitcoin traded for every Bitcoin received on chain, that number has actually dropped when we look at the 7-day average. So that Bitcoin that's being stockpiled on exchanges is not being traded as frequently as we might expect, suggesting people might be just waiting to see what's going to happen. And Tether has also seen an increase in balances on exchanges, actually reversing something that we saw last week, which for me was a bearish signal, the fact that there was less dry powder, less Tether on exchanges to buy Bitcoin. This week, we're actually seeing those balances build up. So perhaps now people are waiting to buy if the prices fall. So on the Bitcoin side, you've got people building up their stocks, perhaps waiting to sell. And on the Tether side, you've got people building up Tether, waiting to buy. If we look at the flows between exchanges, well, then we see that actually the flows between exchanges have declined across the board in the last week. There's less Bitcoin flowing between different types of exchanges. However, there's been an increase in the flows to derivatives exchanges. They had a net inflow of $58 million this last week, suggesting that people are taking some bigger positions on the futures market. So what does this all mean? Well, more assets are staying on exchanges with fewer assets moving between them. And the price has been rising and is expected to keep on rising. If you look at the forward curve on futures, people expect the Bitcoin price to be higher in the future than it is today. However, the supply of assets on exchanges may put a ceiling on those gains. We saw that this week when Bitcoin went over $10,000. There are a lot of Bitcoin sitting on exchanges. More Bitcoin came to the exchanges. promptly sold and put the price back down below $10,000. So for me, I think people really appear ready for the market to go either way. Some people think there might be a breakout. Some people seem to be getting ready to see the prices fall further, ready with their tether to buy Bitcoin. And I think people are really waiting to see how crypto responds to the dramatic macro events that are happening around us, to see whether actually they generate demand for Bitcoin or actually if Bitcoin is left on the side. So perhaps this week, it's less a story of what's actually happening on chain and what is happening out there in the rest of the world. Thanks, Nisa. Back to you.
Thanks, Philip. You've been watching Coinscrum Markets. See you again next week.